Hey guys, welcome to the channel. Listen, really excited about this video that I'm putting out here for you all. We're going to talk about 5 things that you need to track, 5 very important things that you need to track to start your journey to the FIRE lifestyle. Of course, the FIRE lifestyle, F-I-R-E, financially independent, retire early. That's the goal. That's what you want. You want to be financially independent and retire early. And there's a way to do that. Everybody can do it, but most people won't because most people will not take the time to learn, to educate themselves. They won't deal with some of the behavior issues, the mind issues, emotional intelligence, and all these other things that go along with investing and, building wealth for you and your family for generations to come. So take a listen to this. Go ahead. Don't forget to hit the like button, share the video, and subscribe to the channel, certainly, if you're not a subscriber. So check this out. Well, listen, in today's video, what I want to do is take a little bit of time and talk about 5 things that are going to help you to take control over your finances, your financial situation, and basically everything that pertains to money. And it's very, very important that you understand that you must be aware of these 5 things at all times. Okay. If you're going to excel in the area of finances, if you're going to live the FIRE lifestyle, and FIRE lifestyle is F-I-R-E, financially independent, retire early. That's the goal. That's what we want to do, is be financially independent and retire early. No longer do we want to be slaves to the system where, you have to wake up each and every day and go to perhaps a job that you're not really interested in, or that is not going to generate any significant wealth for you and generations to come. So these 5 things, we're going to break them down. I'm going to get my little tablet here and I'm going to write them down for you. And you may have seen this before. You may have seen these boxes before. That's perfectly fine. They're not unique to me. There's many people out there that do these, but I want to explain them to you so that you start this journey the right place, at the right place, okay, and the right way. The first thing you need to know is you need to understand where income is coming through. So that's going to be one of our boxes. We'll go into that. Second thing is going to be expenses. The third thing out of the 5 things that you must be aware of at all times is, what are your assets? Okay, what do you own? The fourth thing is liabilities. Typically, that's going to be debt that you have, which leads us to the 5th thing, which is, of course, one of the most important things, and that is cash flow. Okay, cash flow is king. You have to have cash flowing into you, into your family, into your life, into your world, financial world as it is, in order for you to live the lifestyle that you want to live and be able to give and do, those unique things. So we're going to look at these things one by one to help you out. And the first thing is, and this may be something that you want to write down as well, is the income box. Income. Okay. So income, where does income come from? Well, for most people, of course, if you're just starting out, most money, most income comes to you from your job. Okay. And then that, you may work for someone, or you may be self-employed. If you're self-employed, okay, if you're self-employed, then that is where you own a job. Okay. You're the boss, right? And it's not, a lot of times people think that it's in the business quadrant, where you own a system. There may be some overlap to that, but essentially, to keep it simple, you own a job, and that's where income comes from. That's probably the extent of most people, that income comes from their job, and that money flows in. Okay, so you have money that flows in, all right? Money flows in, and that's income, all right? Your paycheck. And that's either going to be weekly basis, bi-weekly basis, monthly basis, what have you. That money flows into your checking account. Generally, this is how it works. It's not true for everybody, but most people, money flows in, you get direct deposit. Okay, it flows into your checking account, and that is income. All right. And then, of course, when it goes out of your checking account, that's an expense or expenses. And we'll look at that in a minute. Most people live pretty much paycheck to paycheck. Money comes in, money goes out, in, out. Okay, you get it, you spend it, it's gone. Many times it's gone before you even get it. Okay. Most people get paid from their job and they don't have too much of anything left over. If they do have something left over, and we'll go into that, they typically end up putting that into something like a savings account, or maybe they even have it, out of their check before it hits their checking account in the form of something like a 401k, what have you. Okay. And that's not necessarily a bad thing. It's not necessarily the best thing, but it is a way for people to, save and do some investing. We'll get into that down the road in some other videos. But when money comes into the account here, this money comes in and then it immediately goes out in the form of an expense. Okay. Again, that's called living paycheck to paycheck. And the unfortunate reality of it is this, is that many people are one paycheck away from disaster. Okay, if they didn't get that paycheck, then what are they going to do? Now they got to start calling creditors, or the creditors are going to call them. They got lights, they got gas, they got water, they got trash, they got food, they got mortgage, rent, whatever. Okay. But by and large, most people, and again, most Christians, most believers live paycheck to paycheck. Okay. They're at the end of the check, they're flat. They got the money, they pay their bills, not too much, if anything, left over. Okay. Then there's another group of people that have more bills left at the end of every paycheck. This is where expenses exceed their income. Okay. So let's look at some expenses. What are some expenses we have? Okay. People have rent, or basically a mortgage, food, that's an expense. Okay. Car note, expense, insurance, expense, gas in the car, travel, if you take the train or the bus into work, you have other expenses, your monthly credit card payment. Okay. That's another expense, cell phone. Okay. These are some of the things that most people just have. Okay. And like I said, the money comes in, the money goes out. But what if you have, this and this is outflow to the creditors, to the mortgage holder, what have you, and there's more expenses than income. Okay. Well, what do? What do most people do? Well, the only way to make that work is you're going to have to most likely borrow or go into debt. Okay. And when that happens, when you borrow money, or when you put it on, let's say, a credit card, let's say you go to the grocery store, you don't have any cash left over at the end of your check. Now you go ahead and you go to the grocery store, you buy, $200 in groceries. Okay. Then what you do now, the next thing we have liabilities. Okay. Liabilities. Right. So in liabilities, now you take that shortfall of $200. Okay. You're $200 short because you got to buy food. Then what you do is you go to Visa and you pull out Visa and you buy $200 worth of food. Now you immediately create a liability of $200. Okay. Now this $200 that you have a liability for is going to come due at some point. You can say it's going to come due in a month or so. Okay. For the sake of this video, we'll say in a month from now, you're going to have a payment to do. And that payment for $200 is probably going to be, let's say $20. Well, that's going to increase your expenses. Let's say you were paying $50 a month. in credit card payments. Now what's going to happen is you're going to add 20 to it, and now you've increased your expenses by $70. Okay. Now, it may not be $20. It may only ticked up $5. That's fine. Okay. Numbers are numbers. Even if that was the case, and let's go with that. Okay. You were paying $50. Okay. And your credit card bill for adding $200 on there only went up $5. Again, now your expenses the next month go from, if we're just looking at the credit card, $50 to $55. Okay. In addition to that, what happens is you're going to be charged something called interest. And of course, today with inflation, interest rates are, I believe on average, I just read that they're right around 22, 23% on average. Okay. Many people are paying 29, 32% and so on. Whatever that interest is on that $200. And let's say that interest is, $10. Okay. Now what you're doing is you're adding $10 to the liability. Of course, you made a payment of $5 against that new debt. Well, look what happens. You now actually went up in your liability. Now, it doesn't always work like that. Okay. Even if it went down, sometimes it goes down, but it only goes down by $2. So, okay, wow. So a $200 liability is now only a $198 liability, but you've still increased up here in your expenses. Okay. So that's what happens when you don't have enough income coming in and you have more expenses than income. You're going to have to borrow. And when you borrow, okay, not all borrowing is bad, but when you borrow, you are now the servant to the lender. Okay. So the goal of knowing what your income and expenses are, as well as your liabilities and this other area called assets we'll get into, okay, is to really help you understand where your cash flow, because again, we have 5 things. We have, income, know your income, what's the money coming in, income, what are your expenses, that's outflow. This is basically budgeting 101. Then you must know what your liabilities are. What do I owe? What's it costing me? And what are my assets? Okay. This then equals, okay, those 4 equal cash flow. Okay. So we take income less expenses. Okay. That's going to tell us what our cash flow is. Right. So we if we're going to be financially wise, if we're going to be, again, live the FIRE lifestyle, financially independent, retire early, we have to track. That's the first thing you want to do. Start to track your financial situation. Okay. And again, you want to track this because you need to know where you're at today, but then also what's going to happen in the future, specifically in your retirement years. When you're retiring, you want to make sure you have cash flow coming in, and you don't want cash flow because may not be able to do it. You don't want cash flow coming from a job. Maybe it's a part-time job and it trickles in a little bit of money. Okay. I'm good with that, but you don't want to be dependent on a job later on. The older you get, the less you want to be dependent on a job. I would even say whatever age you are, you don't want to be dependent on a job. Jobs are not cool. Okay. Self-employed, again, that's okay as well. However, remember, being self-employed is simply you own a job. Okay. What you have to do is you have to take that income, and over time, you're going to have to add to this column right here. This is the thing that you want to focus in on. You want to become wealthy. You want to become financially independent, retire early. Your focus is going to have to be here on assets. It's all about assets. Think in terms of assets. Okay. So when we look at this, again, kind of go over it one more time, liabilities, okay, when you look at liabilities, they're generally, what are they? We have credit cards, okay? You can write your own down credit cards. People have student loans, okay? Other type of loans in general, whatever those may be, mortgages, and, personal loans, okay? Okay, all of these are liabilities. You have a debt. You owe something back. Okay, now assets, and this is where, again, if you were to work with me one-on-one in financial coaching, this is where we focus in everything, because this is how you're going to live the fire lifestyle. This is how you're going to have passive income generated into that income column. So, you no longer have a job. You can, if you want to do one just because you want to stay busy doing something, that's fine. Or if you're self-employed, you want to do something, book writing on the side, whatever, that's fine. But those are not your primary ways of living. You want passive income. Okay. Passive income. All right. And passive income comes from the asset column. So if you don't have today, you think in terms of what are we doing? Do I have any assets? And those assets aren't generating income, then you have no passive income. Okay. The way to think. So let's talk for a moment about assets. Okay. What are assets? Okay. Well, you can really break assets down into two types. Okay. One type of asset produces income, and then you have non-producing assets. Okay. Now, let's look at non-producing assets. Okay. Non-producing assets would be something like your home. Okay. If you have a mortgage, it is an asset. Okay. It's something of value. An asset is something of value. Your home is an asset. Okay. Your car can also be a type of asset. Okay. But it's not producing income. Okay. It's not producing cash flow to you. As a matter of fact, your home and your car is also on the liability side. Okay. There it is. Okay. There it is. So, but it is still considered an asset, especially the banks. They'll look at it as an asset, but you have a liability against it. And it's not a true asset because it's not generating income. Okay. So what you want to focus in on is income producing assets. Okay. Remember the first or original intent of God with mankind is that mankind would be fruitful. That word fruitful speaks in terms of producing. What are we to do? We're to produce something, income, from seed that we put in the ground, which generate or create an asset that bears fruit, produces. Okay. That's how you want to think. You got to get that mind together. Okay. So your home, your car, I'll even go this far, which is 100% true. Gold and silver. Okay. Many people are into gold and silver. And that's good. Those are non-income producing assets. They're assets, but they're not income producing. Cash. Okay. A lot of people like cash. Okay. I don't particularly care for cash. I look at cash as something that really doesn't generate. Okay. It's an asset, but it doesn't generate income. So what you have to do is you have to take that cash and you have to go out and buy some income producing asset. And what is an income producing asset? Well, for example, it could be rents. Let's say you have a rental building. Okay. Rents, royalties. Okay. It can be dividends. Okay. You have stocks, you have dividends, it can be distributions. Okay. It can be intellectual property that you have that's generating assets, such as things like, books and other type of materials that generate income. Those are assets. So, the focus here today on this video for you guys is to just really get your mind set in the right area. Okay. If you're going to live that fire lifestyle, there's a lot to it, but this is the first place. This is where you start. Okay. I don't care where you're at. Okay. Now, some of you may be more advanced in this. That's fine. You can bypass all this, but if you're more advanced and you're in finances, then you should be doing this. If you're just sitting there and saying, well, you know what? I'm just going to go ahead and work and I'm going to throw money in a 401k and then, later in life, everything's going to be fine. Okay. Or, I'm going to live a lifestyle where I don't have any debt. Okay. Everything's cash and carry. I take my money, I put it in the bank. I earn my 0.5% to 1%, whatever. It's not going to cut the mustard, guy. You're not going to be able to live the fire lifestyle. It's just not going to happen. Okay. There's enough evidence out there that says, things like Social Security and 401k is not going to be enough to sustain. You're going to have to learn new things. Okay. And I believe, that for citizens of God's kingdom, us Christians, us believers, we have enough information in the Word of God, and we have the Holy Spirit within, where we should be living this life where we are generating wealth. Remember, it's the Lord our God that gives us the power to obtain wealth. And we're living in the greatest time ever, where there is a massive redistribution and reallocation of wealth. But if you don't understand this right here, then it's just gonna, it's like the Bible says, your bag is going to be filled with holes. In other words, it's like taking money in, put in your pocket, but your pocket has holes in it. It just goes away. You have nothing. You have no assets. You have nothing to show for it. So again, this is a mindset. Think in terms of assets. I need assets. Okay. I don't need to buy things, although having things is fine. I don't need to just get by. I need to get assets, and those assets should be or must be income producing. And over time, what's going to happen is that asset is you're going to add more to your asset column, and your assets are going to produce more, and you reinvest that money, that cash that's generated from that asset, back into the same asset or a different asset. Okay. So anyways, well, listen, guys, I hope this helped you. Okay. I hope that you guys get something from this. You understand that it's very important to track. Okay. You have to track what you're doing, both, income, expenses, assets, liability, which is going to be your cash flow. And at the end of the day, again, as you get older, you want to make certain that you have significant cash flow to where, you're not bound to the world system and either working a job until you die, or depending on government programs, government aid that just, quite frankly, is, probably won't even be there. Okay. So listen, again, if you're not subscribed to this channel, go ahead and subscribe to it. Click the like button for me, please. Okay. Share this video with others. Let's make some noise. Let's go ahead and get some energy around this thing. And I'll see you next time on Wealth Creation Unlimited. Okay. And remember, this is something you can do. It's not difficult, but you need to learn how to do it. Change that thinking. Remember, poverty and lack, insufficiency is not a condition of one's pocketbook or wallet. It is a condition of one's mind. God bless you. I'll see you next time around.